Hey there friends, it's Tahmid here, and you're watching another episode of Tahmid Talk. Canada is one of the wealthiest countries in the world, but also one of the most unaffordable when it comes to housing. In fact, real estate has become so expensive that home ownership feels more like a fantasy than a milestone for millions of Canadians. But how did we get here? How did housing turn from a basic need to one of the biggest speculative assets in the country's history? And more importantly, what happens if the bubble truly pops? Stick around because this is a story about more than just real estate. It's about Canada's future and fate. Let's rewind to the decade I was born in, the 1990s. The last time Canada faced a real estate correction, back then prices in cities like Toronto and Vancouver fell more than 20%. And it took nearly a decade to recover back to previous highs. But starting in the early 2000s, everything began to change. Interest rates dropped dramatically, global capital flowed into Canada, and cities like Toronto, Vancouver became global investment destinations. After the 2008 financial global crisis, Canada's banks remained largely strong while others collapsed in the USA. That stability, combined with cheap borrowing rates, made real estate the go-to asset in the country. So the result, from 2000 to 2024, merely 2.5 decades, the average real estate prices across the country more than tripled. Real estate went from a place to live to a place to park your money, and then watch your money multiply overnight. As a result, by 2020, with the onset of the COVID-19 global pandemic, nearly 1 in 5 homes purchased in Ontario were purchased by investors. In some GTA, Greater Toronto Area markets, that number climbed even higher as multi-unit properties, condos bought in pre-construction, and houses were flipped for a quick profit, and that became the norm. This led to a speculative frenzy of FOMO and fear of missing out. Homes bought not only because people needed to live in them, but because buyers thought prices would never stop going up. And here's the kicker. Governments all across the country leaned into it. Tax revenues from the use of land transfers, development fees, and inflated property prices became crucial for municipal budgets. You'll often hear this. Canada has a housing shortage. And yes, there is truth to that. We're not building nearly enough affordable housing units. But here's the nuance. We've been building lots of condos lately, just not homes people can actually afford and want to live in. Between 2016 and 2021, over 60% of new builds in Toronto were small, tiny, shoebox-sized condo units, not family homes or rentals people would want to live in. Meanwhile, the population growth to these cities driven by record immigration numbers and international students surge, adding more demand in an already overheated market. So is it a supply issue? Yes, but it's also about who we're building for and who's actually buying and what they need. As home prices skyrocketed in recent decades, Canadians took on record amounts of debt to keep up. Today, the average mortgage in Toronto and Vancouver is well over $600,000, and that's assuming someone has a large down payment or some sort of inheritance to begin with. When interest rates were near zero, near the onset of the COVID-19 pandemic as an emergency measure, this type of debt was maybe manageable. But as of 2023 and 2024, the Bank of Canada has hiked interest rates several times in some of the fastest pace ever witnessed on record. Now, as the chickens come home to roost, hundreds of thousands of Canadians are facing mortgage renewals at double or even triple their current payments. And if housing prices continue to fall even modestly, many will owe more on their homes than the homes are worth, creating a situation called negative equity, or as the common folk call it, being underwater. So once again, coming back to my question, what happens if the bubble pops? Well, first, prices do not collapse overnight. Canada has strong banks and tight lending rules, which could soften the blow. But the threat isn't just to the home values or the individual and the families themselves. It's to the whole Canadian economy. Real estate accounts for nearly 14% of the whole Canadian GDP, gross domestic product, more than oil and gas and other sectors that are valuable. A correction would mean less construction, fewer jobs, and declining consumer spending because Canadians are already maxed out on debt to begin with. The Bank of Canada and policymakers find themselves in a tight spot. Raise rates to control inflation and you risk a crash. Lower them and you risk fueling more speculation in real estate. The good news, or the silver lining here, is that crisis forces change. Some provinces are already reforming zoning laws to allow for more gentle density. There are talks of taxing empty homes, cracking down on money laundering, and investing in public housing. But the biggest shift needs to be cultural. Housing cannot just be an investment vehicle. It has to return to being what it always was for decades, a place to live and raise a family. Canada needs some sort of a bold national housing strategy, not more band-aid solutions. So friends, what do you think? Is Canada's housing market headed for a large reckoning? Or will we manage a soft landing this time? Drop your thoughts in the comment below and let's talk. If this video helps you understand better, give it a like and hit the subscribe button. It's totally free and helps me keep making videos like this for you.